Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. China hints at trade talks as the tariff war bites. Beijing saying the door is open if the U.S. shows sincerity. Slowing growth, the IMF cuts forecasts for the MENA region on weakening oil and rising geopolitical risks. And tech warnings. Amazon braces for a tougher business climate in the coming months on tariffs and economic turmoil, while Apple warns of increasing costs after worse than expected first quarter sales in China. And it has just gone 8 a.m. across the Emirates. I'm Joanna Bersetchi in Dubai. Congratulations on making it to Friday. It's been another quite volatile week for markets and everything else that's going on. But let's just take a recap of how things are faring, because we had the 8th consecutive day of gains for the S&P. The last time that happened was in August of last year. So little by little, the S&P has been slowly regaining the ground that it lost. Still negative on the year, but slowly inching higher. And of course, a lot of attention has been on the earnings that have hit this week. In the headlines, we were talking about Amazon and Apple. Relative to the others that reported, Meta and Microsoft, I've got to say they disappointed versus expectations. Later on in the show, we're going to do a recap of all of the tech earnings we've got through this week. But take a look at S&P futures, NASDAQ futures, both leaning towards the green and possibly on back of those lines coming through from China suggesting that they would be open to trade talks with the U.S. as long as the U.S. approaches it with, quote, sincerity. So that's been a bit of a relief for Asian markets, and you can see U.S. markets also leaning towards positive as well. The USD dipping today, but in the last week, we are up about 0.4%. So again, some stabilization coming through for the dollar. And then 10-year yields were back at 4.23. I've got to say there was strange price action yesterday, because even though we had weaker than expected ISM manufacturing numbers, typically when there's bad data, you tend to see fixed income rally. Yesterday, that wasn't the case, and actually bond yields moved upwards on the news. So interesting price action there, at least as far as bonds are concerned. Could tell you maybe something about positioning. Switch over, though, because one thing I do want to just point your attention to is we've sort of moved back to this old paradigm of bad news actually being good news. So what we've seen is the 2-year yields are rallying, but S&P has started inching higher, i.e., even though the data, the soft data that's been coming through has been disappointing to the downside, and rates have been rallying on the back of it, the S&P actually has started moving higher again. So that's the blue line versus the white line, a sort of breakdown or a resumption of the traditional correlation that is held between the two. So that's an interesting one. In the time that I was speaking, we got some more bank results coming through. So let me just bring them to you. Standard Chartered, first quarter adjusted pre-tax profits coming in as a beat, $2.28 billion versus the estimate of $2.15 billion. Their guidance for the year remains unchanged. 2025-2026 guidance is unchanged. Operating income, so at a top line, the number came in at $5.39 billion versus estimates of $5.32, so a beat on both top and bottom line. The return on tangible equity coming in at 16.4% as well. CET ratio, we are also getting 13.8% too. So this is just the figures, rounding up the figures. And the last couple of days, I've got to say that we have had actually positive results out of the European banks, and Standard Chartered is just another example of that. Okay, it doesn't stop there. Starting off the Friday with lots of news for everybody. This one is important, too. Just in, Trump has ended the de minimis tariff exemption for China packages. It's the timing, obviously, to do with midnight Eastern time. But now officially has ended the de minimis tariff exemption, i.e. for goods below a certain value. There was going to be, or they were considering a tariff exemption. That no longer will be applied anymore. So on that note, China says it is assessing the possibility of trade talks with the U.S., citing senior U.S. officials' willingness to talk about tariffs. U.S. Secretary of State Marco Rubio says that China wants to come to the negotiating table.
Can we reach some sort of short-term accommodation with them? That's what they want. I mean, the Chinese are reaching out. They want to meet. They want to talk.
For more, China correspondent Min Lo joins us from Hong Kong. Okay, maybe let's just start with the big announcement before we talk about the de minimis tariff exemption. What do you read into what the Chinese Commerce Ministry has said and the fact that China seemed to be opening a door to discussions with the U.S. now? Is it a breakthrough?
Yeah, it's definitely a very, very big move. We are seeing big market reactions today. You look at the Hang Seng Tech, a big jump of about 3% today. The Hang Seng China Enterprise Index was about 1.5% up just before the lunch break. And this is the first time we are having a Chinese ministry officially acknowledging that the U.S. has been reaching out for trade talks. And it's confirming what a social media post on Chinese social media yesterday said. That was posted by an account linked to Chinese state media. Also saying the same thing and also emphasizing that the fact that it is the U.S. reaching out for trade talks, it shows that the U.S. is the more anxious party here. And you can see how both countries, U.S. and China, are both speaking to their domestic audience, because there you heard Marco Rubio also saying that China has been reaching out to the U.S. on economic issues. So I guess it really doesn't matter who reached out to whom first, but the point is that it looks like the momentum is picking up. Both sides are assessing the possibility of coming to trade talks. But the Chinese Commerce Ministry, though, had some caveat in its statement today. It said that what China wants to emphasize is in any possible dialogue, if the U.S. does not correct its wrong unilateral tariff measures, it means that the U.S. has no sincerity and it will further damage mutual trust between the two sides. So some sort of preconditions, it seems, that China is demanding. It still wants the U.S. to remove unilateral tariffs. And again, that starting point there, I'm not sure how likely that is going to happen. So whether both sides will be able to, come to some sort of agreement, that is the big question.
Yeah, and at the same time, the end of the exemption for the so-called small value packages, the de minimis packages coming from China, has also just ended, which is interesting because it means that starting from today, those small value items will no longer be exempted, and that's going to have an impact on some of the retailers like Shein, Temu. There was a good report on the terminal a week ago talking about how Shein, ahead of that, were looking to already introduce some price hikes. What has been the reaction from some of the Chinese retailers and the likely impact it's going to have on U.S. consumers?
Yeah, certainly we have. I mean, this was well anticipated, right? The 2nd of May deadline. And we have seen some of these big e-commerce retailers, Shein and Temu, already raising prices. Temu especially passing on the import charges, almost all of the import charges to consumers as high as 140%. And we are seeing not just the Chinese e-commerce players that are affected. Amazon just reported earnings as well. That's an e-commerce player that it sells about a quarter of its products coming from China. It also has this low-cost platform called Haul, which ships products from Chinese warehouses as well. And already we got that forward earnings guidance from the company, missing estimates. It provided a pretty wide range, which shows the uncertainty there is. The company clearly bracing for a slowdown in the next quarter onwards and citing a long list of issues, including trade and tariff concerns and potential recessionary fears as well. And if these Chinese suppliers decide to pull back, it is going to hit the logistics, the advertising revenue for the likes of Amazon as well. So a big impact for companies and for consumers in the U.S. as well. And of course, for these factories in China that are already suffering from a very tight margin and may not be able to absorb the cost of these tariffs.
Yeah, and we can't forget the sort of showdown, the mini showdown that took place between Amazon and the Trump administration this week when they floated the idea of including explicit pricing on some of their products. It doesn't seem like it's going to happen on the main website, but that is on back of some of these measures. Min, really good reporting. Thank you so much for joining our show. Bloomberg's Min Lo. All right, let's pick up the conversation. Joining us now is Anita Krishna Gupta, CIO at Wealthbrix Capital Partners. New title for you. Congratulations on the new role as CIO. Good to be talking to you as always, Anita. Do you see the comments from China today as a breakthrough?
Yeah, thank you, Jumana. Absolutely, I see the comments as a breakthrough. So it looks like nothing happened in April, right? From 2nd April when tariffs were announced to 9th April when there was a concession given for them to be delayed. And now again, we've got China-US talks that are emerging. Now, if that happens, that's the last leg in giving a boost back to China and US and global equities.
Yeah.
Because the way we look at US markets, a little bit overvalued still. But yet, if we look at where the R&D is happening, it's still the US.
Yeah.
So absolutely, it's a huge breakthrough if the talks do happen.
Yeah, it seems so. Markets have been recovering. Equity markets have been recovering then. Do you think they are poised to continue now with this rally?
Okay, so now, having moved on as CIO at Wealthbrix, I think our first, focus is capital preservation for clients. So yes, equity markets are recovering. We are very cognizant of valuations out here. So we would stay invested. That has been an absolute, I think, go-to for investors. I would say over the last decade, over the last century, you have to go through, you have to, kind of buy through any of the downturns. And that's the same thing that happened on April 2nd. If you had stayed invested, and you are fine today.
Yeah.
So absolutely, yes, we would keep adding to equities, but not necessarily the US. US, I think, at the S&P 500 at a PE of 21 and an earnings growth of, let's say, 8% for this year, you would end up somewhere around 5,600 fair value.
Yeah. Would you say the risks for markets now are more skewed to the upside or the downside?
There are two parts to that. So in terms of the bond market, absolutely, I would say that the risks are skewed to the downside. You're going to have a lot more central banks cutting both emerging and developed market. So I think it's an absolute win-win for bonds, whether it's treasuries, whether it's in terms of EM, whether it's hard currency debt, local currency debt. You've got a weaker dollar that's probably going to continue. So that's a clear, I would say, a risk-on strategy in terms of the fixed income market. In terms of the equity markets, I would be a lot more selective. I would be very careful of where valuations are. I would be very careful of quality companies in terms of where the cash flow is coming from, and be a little bit defensive. So neutral equities with a slight preference for emerging markets at this point.
Yeah. On fixed income, looking back at the month, U.S. Treasuries are up about 20 basis points still. But the rest of the world, I mean, Europe, at least European fixed income, UK fixed income, we've rallied quite a lot. Do you expect the underperformance of U.S. fixed income to continue?
Possibly, yes. It would depend a lot on the macro numbers that are coming out, hard data, soft data, in terms of the rate cuts that are expected. So the market's pricing in about 100 basis point cut this year, definitely one in June or July. So I think those rate cuts are going to help both economic growth as well as the U.S. bond market. But definitely, U.S. government debt has lagged behind some of the other countries at this point.
Let me ask you about positioning in some of the safe havens. Gold has been a stellar trade this year, but at the same time, if you had bought gold around $3,500, you'd be underwater now. So it's nothing moves in a straight line. The narrative turns on a dime. How are your clients feeling about wanting to hold gold at these levels?
Absolutely. Our clients at Wealthbrix will be holding gold. We would be recommending that too. We think there's a secular shift there. Two parts to this. One, of course, is that central banks are definitely buying more gold, against the US dollar at this point in terms of their reserves. And we're also seeing globally investors would like a little bit of gold in their portfolios. It kind of evens out the shocks of volatile markets.
Yeah, so that's one way to hedge what could still be quite a volatile rest of the year.
Absolutely, one of the easiest ways to hedge at this point.
Very quick final question. We have NFPs coming up later today, and this is maybe more short term. The market is penciling in and accounting for a weaker print today versus where we were last month. What do you think would happen if we actually get an upside surprise? Does this give another leg to the price action we've seen in the past few days?
I don't think so. I don't think that at this point a little bit of data like this is going to affect markets. We are looking forward to rate cuts, and I don't think that's going to change with a very positive print.
Yeah. Okay. Anita, thank you so much. Good to chat to you. Anita Krishna Gupta, CIO at Wealthbrix Capital Partners. Now, the International Monetary Fund has downgraded its growth forecast for oil exporting countries in the Middle East and North Africa, citing escalating global trade tensions as well as lower energy prices. The IMF has lowered its outlook for Iraq and Saudi Arabia while also having discussions with Lebanese authorities.
2 missions went to Lebanon before spring meetings. During spring meetings, we had active discussions with the authorities. Good step was took place during the spring meetings with the adoption by the Parliament of the law on bank secrecy. The discussion will continue. A mission will go probably to Lebanon sometime by the end of the month of May.
That was part of my interview with Jihad Azour, Director of the IMF Middle East and Central Asia Department, and we have more from this discussion next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bursachi in Dubai. The IMF says countries across the Middle East and North Africa face significant challenges to their economic growth outlook. In the Regional Outlook report, the Regional Economic Outlook, it cites tariff uncertainty and lower oil prices as driving factors. I spoke to the Director of the Middle East and Central Asian Department, Jihad Azour.
Well, in 2025, growth is expected to recover in the region, yet at slower pace. We expect growth for the whole Middle East to reach 2.6% and next year to get to 3.4% in 2026. The high level of uncertainty has already led us to revise down our projections for most of the countries, and we still consider that the risks are on the downside heavily.
What do you think is the bigger downward pull for the region? Is it lower oil prices or the threat of tariffs?
Well, first of all, direct impact of tariff was limited, giving the limited integration in terms of trade with the U.S. and the exemption of the energy sector. Yet we saw and we expect that indirect effect of the tariff policy will be substantial on certain number of issues. You have the impact on financial conditions. We saw widening of spreads for certain number of countries, especially those with high level of debt. We expect also that the demand impact on the oil price will lead to softening of the oil price that will have an impact on oil-producing countries, both on the fiscal side as well as also on the external account. And we have certain number of issues related to the second round impact of trade. Redirecting trade could have an impact on countries of the region. And this is why we are calling on, with this increase in uncertainty, countries to take certain number of policies to address that.
Yeah, so all of those are contributing to the drag. Let's talk about some of those oil-producing nations. Saudi Arabia, IMF have downgraded the forecast to 3% in 2025. That was versus 3.3% in January. So a downgrade has come through. How do you see the path forward for the oil sector versus the non-oil sector as part of the Saudi economy?
Well, in the Saudi economy, the oil sector has been evolving with the evolution of the OPEC Plus agreement, as well as also the oil price.
Yep.
And the non-oil sector has been performing relatively well, strong growth over the last 3 to 4 years, driven by the reforms as well as also by investment and the activity in the private sector. And this is, in fact, the main driver of stability and economic growth in Saudi. The latest update in the OPEC Plus will show an increase in export, yet with the softening of oil price, this will reduce the level of revenues that the Saudi will get from the oil sector.
What sort of spillover is there? Or, I mean, you can tell me, according to your own analysis, is there from the oil sector to the non-oil sector? i.e., if there are headwinds facing the oil sector and the oil parts of the economy, is that going to have any knock-on effects on how fast the non-oil parts can grow?
The strategy in the last few years was to diversify the economy outside oil, and this has succeeded to bring the non-oil sector to a stable level of growth, acceptable level of growth compared to other G20 countries. And also we saw a diversification on the fiscal side. Revenues of Saudi are less and less dependent on oil. Of course, the drop in oil price will have an impact. Will have an impact on the fiscal. A decline in oil price of $10 on average will have an impact between 2.3 to 2.5% on the fiscal balance, and on the external balance between 2.5 to 2.7%. But the overall, I would say, strategy of diversification, of being less pro-cyclical, are playing in the ability of Saudi to be able to have a stable level of growth and to diversify their economy.
That was Jihad Azour, the IMF's Director of the Middle East and Central Asia Department. And I also moderated a panel on the IMF's Economic Outlook report for the MENA region. And I asked Halima Croft from RBC Capital Markets for her views on Saudi Arabia's recent actions in the oil market.
The Saudi oil minister, His Royal Highness, he's always been, I think, an advocate of market management, but he also has the principle that everybody must carry their weight. He does not like the idea of free riders. And so I think what we saw, even over the summer, we got, views that countries that were not reaching their targets, that the Saudis could potentially sunset their 1 million barrels a day quickly because they were not prepared to carry the non-conformers.
That was Halima Croft, head of Global Commodity Strategy and MENA Research at RBC Capital Markets. Well, still ahead, Apple's quarterly earnings report failed to ease investor concerns, while Amazon is bracing for a tougher business climate. A look at the latest tech earnings coming up later in the show. This is Bloomberg. President Trump says he will nominate Michael Waltz, his current national security advisor, to be the next U.S. ambassador to the UN. Marco Rubio will serve as interim national security advisor while keeping his job as Secretary of State. The development comes after Waltz admitted to adding a journalist to a Signal group chat discussing sensitive attack plans. President Trump has threatened to impose secondary sanctions on nations or companies buying Iranian oil. The move targets a major revenue source for Iran and comes as nuclear talks planned for this weekend are postponed. Sanctions could also further inflame tensions with China and the UAE, both of which buy petroleum products from Iran. South Korea's finance minister has resigned just hours before he was due to become the nation's stand-in leader. Choi Sang-mok apologized but said he could not perform his duties under what he called were severe economic conditions. Choi had been set to take over as acting president after Han Dok-soo stepped down to run for the top job in elections set for June the 3rd. And a look at markets. Equity futures got a spring in their step for the final trading day of the week. All of these futures leaning towards the green. S&P up 0.7, Nasdaq up 0.5%. European markets also looks like it's going to be a solid open there, up 1.3%. The market taking well those comments from China that they're opening the door to discussions with the U.S. on tariffs. So that has set the mood for today. Coming up, Kenya plans to significantly reduce its budget deficit as the country seeks a new IMF program. That story next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. China hints at trade talks as the tariff war bites. Beijing saying the door is open if the U.S. shows sincerity. Slowing growth, the IMF cuts forecasts for the MENA region on weakening oil and rising geopolitical risks. And tech warnings, Amazon braces for a tougher business climate in the coming months on tariffs and economic turmoil, while Apple warns of increasing costs after worse than expected first quarter sales in China. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. A lot of green on the screen behind me, so we're ending the week with equities leaning towards positive. The S&P up 0.7%, Nasdaq up 0.5%. All eyes today going to be on that jobs data. The market is expecting moderation from last month, but an unchanged unemployment rate. It has been a week of, I would say, weak survey data coming through from the U.S. ISM manufacturing disappointing to the downside yesterday as well. And of course, don't forget earnings. We had Apple and Amazon Amazon. We're going to talk about them shortly, but the market reaction was negative in after hours. That being said, a lot of green, namely on back of those comments coming through from China suggesting that they are open to tariff discussions with the U.S. So a step in the right direction there. USD slipping a little bit in trade today. We're down 0.3%, and then 10-year yields back up to 4.23. We're up about 8 basis points throughout the course of the day yesterday, despite the weaker data that came through. Flipping the board, one thing I want to draw your attention to is what's been happening with that correlation between stocks and rates. Interesting to see that 2-year bonds have been rallying, i.e. the rate has been moving lower, but what we have seen over the last couple of weeks is the S&P has started stabilizing and moving back upwards again. So that is sort of a dislocation that is quite pronounced that has come through in the last couple of weeks, and just suggests that even if the survey data is disappointing to the downside and markets start pricing in more aggressive Fed cuts, bad news is potentially good news again for the stock market because of the Fed's potential actions. So something to bear in mind. Let's move back and talk about some of the tech price action, because Apple shares fell in late trading after it reported worse than expected sales in China and warned that tariffs will increase costs by $900 million this quarter. For more, let's bring in Bloomberg's Charlie Wells. So let's just start maybe with Apple and what we heard. They clearly have a lot of exposure to China. Talk us through the results yesterday.
Jumana, this was always going to be the harder part of tech earnings because both Apple and Amazon have indicated kind of softness ahead. And when you think about Apple and you think about China, they have so much exposure there on the production front, which we know is very sensitive to the trade war that's currently ongoing. But also in this report, Apple indicated a slowdown in sales in China. Now, Greater China is the third most important market for this company. And so that is a sign that maybe Apple is having a difficult time breaking through with its iPhone. It's an incredibly competitive market. And Tim Cook, speaking to the future, said that in the current quarter, the company could take a $900 million hit from tariffs, which the market did not like.
And talk us through what happened with Amazon as well. Big week for Amazon earnings yesterday. And then interesting to see that the Trump administration just removed the tariff exemption for de minimis packages of small value. How is that all likely to impact Amazon in the coming months and quarters?
Amazon was interesting. So they had a fairly decent, prior quarter report, but their CEO talked about the uncertainty that they're going to have to navigate and sort of some pros and cons, right? Amazon certainly is kind of, more geared towards that value consumer. So if we get into a point where that consumer is under pressure, that could benefit the company. But there's still so much uncertainty here. A lot of the third-party vendors, for instance, that they use could actually have to cut down on some of the services spending that Amazon has. And let's not forget how important AWS, Amazon Web Services, is to this company. And actually, we saw growth slow down there. And that's really striking when you compare it to Microsoft, whose cloud unit actually saw significant growth in contrast.
Yeah, well, stock is down 3.2% in after hours, so let's see how it opens up. Bloomberg's Charlie Wells, as ever, thank you so much for the reporting this week and all those big tech names. Well, New Jersey Governor Phil Murphy is in the UAE for investment and trade talks, and joining us is the governor himself live. It's really good to have you with you around the set in UAE, of all places, Governor.
Of all places.
Yeah, really good to see you.
Honored to be here.
So I saw yesterday that you inked an MOU with the UAE. You were setting on establishing a partnership between the two gaming regulators. That's interesting. I'd love to hear more about it. What's the purpose?
Yeah, we've got a big gaming industry presence since 1978, including more recently with sports betting, where we've become the king of the hill in America in terms of the book of business. And we think there's a good amount of wisdom we can impart, by the way, both ways.
Yeah.
UAE deserves a lot of credit for standing up their body very quickly, and this is an exciting one of many memoranda of understanding that we're signing. Yeah. This was a good one.
Did you get the feeling that a casino might be in the UAE sites in the coming years?
I don't want to speak for the UAE, but I thought the fact that they're doing this and setting up a regulatory body is a really smart first step. That's what we did in New Jersey. That actually, believe it or not, has been the attraction for so many of the private sector players in New Jersey over the years. A reliable regulator is a big deal.
Yeah, so you've been on a whistle-stop tour around the Middle East. Tell us about some of the other conversations that you've been having in the places you visited.
Really good conversations. I'm a recovering banker, so I've been in this part of the world, but I'm here as governor for the first time. In fact, I'm the first sitting New Jersey governor ever to visit the GCC. So we've been in Saudi Arabia, Bahrain, and UAE. Lots of great discussions. Higher education exchanges, jobs announcement. We'll have one big one later today, in fact, here in Dubai. Lots of capital investment discussions around infrastructure, AI, other potential projects. Really good, productive mission. So far, so good.
Yeah, sounds like it. Let me just turn to the latest economic developments, and of course, the whole world has not been immune to the tariffs, the decision by the Trump administration to impose tariffs. Let's just start with the impact tariffs may have on your specific states. Which are the companies that are likely to be most affected?
We're probably every state will get impacted.
Of course,
we're probably less impacted because we used to make cars and trucks and chemicals. Those days, we're now an innovation economy where pharma, biotech, telecom will be impacted. Canada, like 36 other states, is our biggest trading partner. But I think in this mission, it's been really important for folks to introduce America at the subnational level. So not just the overall American brand, but to tell the New Jersey story and how that fits in. I'm mostly critical of the execution as opposed to the principles. The president wants to make more stuff in America, so do I. Wants a more efficient government, who could argue with that. Wants to have peace over war. All of that is noble. The execution is where we need to be better, more strategic, sharpen that. I think it's getting, you mentioned stocks are getting into a little bit of a better place. The president's visit here, I think, is a big deal. I'm an optimist.
It's interesting to hear you say that you're agreeing with some of the principles that the Trump administration has put forward. Would you say that is representative of the Democratic Party today?
It's hard for folks, if you're an American, to say, I don't want more manufacturing in America, or I don't want a more efficient government, or I don't want peace. But it's how you go about that. I'll give you an example. We saw the tariffs coming in New Jersey. We said, you know what? Let's put together a massive incentive package that would incent multinationals to onshore into New Jersey and make stuff in Jersey. That, I'm not patting myself on the back, but I think that's more strategic. That's a smarter way to approach getting more stuff made in America.
Yeah. Let me ask you perhaps a more existential question. And I thought this was quite interesting. A Washington ABC poll conducted recently showed that not only is the Republican Party perceived to be out of touch with what is in the U.S. public interest, but so is the Democratic Party, and even more so than the Republican Party. What is it about the Democrat messaging that just is not resonating with the base, you think?
Let's put aside, I've mentioned some principles that I agree with the president on. There's a whole long list of areas that I don't agree with, but we'll put that aside for a moment. There's no question the Democratic Party has work to do. That's the case when you come out of a national election, as we did, and you lose, as we did. There's a lot of rightful soul searching. And I still think we're finding our way. We are the party of the working families. We're the party of the worker. We're the party that's at the kitchen table. We've gotten a little bit away from some of that over the past number of years. I think it's up to us to get back in that groove that we've been successful at in the past, and we will be again.
Yeah, I mean, you come from the, perhaps I would say, the more centrist or perceived to be more centrist part of the Democratic Party. When you look ahead to the future, do you see it turning more progressive or more centrist in future iterations?
People ask me who I am, and I say I'm a proud progressive and a cold-blooded capitalist.
Or a good politician.
Yeah, but I think some folks out there think you can't be both of those things, and I think you absolutely can be. I think history shows that we continue to tap into a proud progressive base, and we never betray those principles. But you don't win elections unless you can appeal to the middle of our country. And I think that's the balance that, as a party, that we have to strike.
Yeah. And do you think that your party will get it right by the midterm elections?
I do. I mean, in part for all the wrong reasons. People's hair are on fire with, you saw some polling recently where words chaos and scary got very high marks in terms of how people are feeling about our country right now. Those aren't good words to describe America, and I think in large part because of a reaction to that, my guess is this will be a version of 2018, if I had to predict right now.
What do you think about Trump choosing to come to the Middle East as his first foreign visit?
Smart. I wouldn't say that necessarily relative to where else he might have gone, although he did, I think, he went to the Pope's funeral, and I think that was the right, respectful thing to do. But to your point, not a foreign visit per se. I think it's a smart move. This part of the world has got enormous momentum. We've seen it ourselves. That's why I'm here. So I don't blame the president for 1 second for coming here. I hope he sticks to those principles, that the execution gets better, that the volatility comes down, that you see some of your charts that you showed earlier, that the bond market stabilizes, the dollar, a strong dollar, I still believe, is in our national interest. Stocks stabilize and recover. Let's get into a better place in that respect. I think the mission here is a smart move by him.
Are you expecting big deals to come out of this visit?
I would bet absolutely. I'm a former U.S. ambassador in my case in Germany when we hosted both the vice president and then the president. You line up a lot of stuff that you can point to and say, listen, this trip produced the following. Yeah. I would be shocked if you don't have a similar reality here.
Well, let me just round up asking you about your own plans. Your term ends at the end of this year. What are you planning on doing next? I saw that Rutgers is courting you to be their next president.
Yeah, I was flattered by that. I will not be the next president of Rutgers, but thank you for raising that. I don't know yet. I've been in public service now for a long time. A senior member of the Democratic Party, ambassador, and now governor, which is the job of a lifetime. I'll be shocked if I'm not involved in some form. My wife as well in public service, but to be determined. We're going to run through the tape between now and then.
Governor, thank you so much. Really good to have you with us on our show today. And the director who speaks in my ear actually lives in your state, so he has hello as well.
Very cool. Very cool.
New Jersey Governor Phil Murphy. Now for a look at some of the other stories we're following. World Liberty Financial says its new stablecoin is being used for a $2 billion investment by Abu Dhabi's MGX in crypto exchange Binance. This transaction links a company controlled by President Trump's family with a cryptocurrency exchange that pleaded guilty to anti-money laundering and U.S. sanctions violations. The deal also involves an investment fund overseen by Sheikh Tahnoon bin Zayed Al Nahyan, the brother of the UAE president. And Bloomberg has learned that the U.S. is considering easing restrictions on NVIDIA's chip sales to the UAE. Sources say President Trump could announce the beginnings of a bilateral chip deal during his upcoming trip to the Gulf. This comes after NVIDIA CEO Jensen Huang urged the Trump administration to change AI chip export rules. And coming up, we'll discuss Kenya's budget plans as it eyes a new lending deal with the IMF. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Dubai. Kenya plans to implement austerity measures to significantly narrow its budget deficit in the year through June 2026. It comes as the country seeks a new IMF program after abandoning a previous $3.6 billion deal last year. Let's get more with Bloomberg TV's chief Africa correspondent and anchor, Jennifer Zabazaja. Jen, what more have we learned about the approved finance bill in Kenya?
Right, Jumana, this is significant for the country for a number of reasons that I'll get to in a minute. But listen, what we heard from the president this week is, as you were mentioning, they plan to cap their fiscal deficit at 4.5% of GDP, and that is actually revised down from what was previously 5.1% the previous years. It will also plan to revise its initial budget to 4.3 trillion Kenyan shillings, which is about $33 billion. And until the budget will not be tabled until it has substantial revisions, as you can see there. Now, this is significant because, of course, Kenya has, as you mentioned, they abandoned this IMF program earlier this year because the IMF had stated that they still needed to go through a number of different spending reframing and rework their spending plan. So potentially this is what they are trying to do. But we've spoken to a few analysts who actually call this quite ambitious, is what they said, because we have seen the government in the past missing their revenue targets. They've also ramped up borrowing in the past year. And so it's going to likely go through a lot of discussions within Parliament and within Cabinet. And the question will be, how are they actually going to push this forward, especially considered the macro situation that Kenya is faced in right now?
And Jen, do you think all these announcements are going to appease the IMF? Of course, we spoke about them having to withdraw from the program earlier this year. The country is looking for a new program. What measures do they have to undertake still, or will this be sufficient?
Right. And actually, when we spoke to Kenya's central bank governor last week, he did, again, as you were just saying there, he reaffirmed that they are looking for a new program within the fund that is going to be similar to what they were looking for before. But yes, the IMF does want to see them rework a lot of their spending targets. And just based on what we did see over the past few years, it's going to be quite difficult, especially if you consider what Kenyans are facing right now. We've seen inflation there hit an 8-month high. That is off the back of a number of increase in prices from food staples that people are very familiar with. Also, of course, we've seen gasoline and diesel prices increase. So the president is not just facing the prospect of having to appease international organizations such as the IMF, but also domestically. How is he going to be able to make some of these spending cuts and remain within these ambitious targets that they've set? And so that is the big question. The governor did seem to be optimistic of the fact that he believes that they will be able to do that, that inflation will stabilize, and that hopefully we're not going to see a repeat of 2024, which, if you remember, Jumana, we, of course, saw the government at least trying to put forward a similar budget, at least on the surface of it, although they wanted to cap GDP, or fiscal deficit, excuse me, a bit higher. And we saw that resulting in protests on the street, and they had to abandon that bill. So this is going to require a lot of discussion internally and also a lot of convincing domestically within the public, and hopefully then they can get to a point where the IMF is confident that they can move forward with a new program.
Jen, always good to have you on. Bloomberg's Jennifer Zavazaja, Chief Africa Correspondent. Thank you. Now, coming up, it is the final day of campaigning for Australia's election, with polls suggesting a tight race and potentially a minority government. We dig into the issues and the impact next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. HSBC's chairman, Mark Tucker, will stand down by the end of 2025 after a turbulent 8-year reign. Tucker's tenure saw him oversee 3 changes of CEO, a clash with one of the bank's largest shareholders, and a public step-down from the U.S. government. The bank aims to complete the search for Tucker's replacement within the next 7 months. Adani Enterprises has reported a 753% rise in quarterly profits. The company's fourth quarter results were boosted by a one-time gain that overshadowed an underwhelming show by its main coal trading unit. Quarterly net income at the Adani Group's flagship was $456 million, and traders will be watching how markets react as they reopen after Thursday's holiday. And Australians vote in a national election tomorrow that's being dominated by cost of living concerns, but has not escaped the shadow of the Trump trade war. The Conservative opposition leader, Peter Dutton, began the campaign with a healthy poll lead. But as Paul Allen reports, surveys now suggest Labour's Anthony Albanese could become the country's first prime minister in more than 20 years to win back-to-back elections.
Saturday is election day in Australia, and already more than 3 million of the country's 18 million voters have cast an early ballot. For those still undecided, this election's boiling down to one key issue.
Is anyone feeling that you're better off today than you were 3 years ago?
Cost of living and runaway real estate prices are top of the domestic agenda. It's a battleground where both opposition leader Peter Dutton and Prime Minister Anthony Albanese seem comfortable. Trade and foreign policy, though, have left both leaders squirming after President Trump imposed a shock 10% blanket tariff on all Australian imports. Dutton initially copied some Trump policies, including spending cuts styled on Elon Musk's so-called Department of Government Efficiency and ending work from home for civil servants. He's since dumped those ideas and has been distancing himself from the US president.
We trust the United States, and I don't know the president. I've not met him. The Prime Minister obviously has been able to.
So you're not willing to say you trust Donald Trump?
I don't know Donald Trump is my point.
On the same debate stage, Albanese also swiftly moved on from the issue of trust in Trump.
I have no reason not to. I've had a couple of discussions with him.
Do you trust China's president, Xi Jinping?
I have no reason not to either. China's our major trading partner. 1 in 4 Australian jobs depends upon trade. It is in Australia's national interest to have a good economic relationship with China.
Australia has already made a $500 million down payment to the United States under the AUKUS Defence Pact, which will see Australia receive nuclear submarines. Neither major party wants to risk sinking that deal by alienating President Trump, nor risk creating a fresh round of trade tension with China by getting too close to him. Unlike the price of eggs, those issues are too fragile to be on the ballot this Saturday. Paul Allen, Bloomberg, Sydney.
All right, Australian elections on the slate for this weekend. Let's take a look at how markets are faring today, rounding up a week of, I would say, actually positivity and relative calm for these markets. So things seem to be stabilizing. S&P leaning towards green, up 0.8%. Nasdaq slightly lower, perhaps on back of the pull down from Amazon and Apple earnings last night. European markets, take a look at that, seen opening 1.4% higher. And again, the tone on tariff and trade discussions seems to be one of de-escalation, with even China saying that they're open to negotiations with the U.S. on that front. So it's setting up to be a positive day for markets after a positive week for trading. And that was Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.